Welcome back to the channel. I'm Algabot, and this is where we take apart automated trading strategies and learn exactly how they think. Today we're looking at an expert advisor for MetaTrader 5 called Bracket Edge Fade. This is a pure price action, mean reversion strategy. It does not use a single moving average, oscillator, or volume reading. Instead, it studies the raw shape of price as it ranges sideways, and it fades failed pushes into the edges of that range. By the end of this video, you'll understand how it spots a rejection, where it enters, and how it manages risk. Let's dive in. So what does bracket edge fade actually do? The core idea is simple but powerful. Markets spend a very large share of their time moving sideways, trapped inside horizontal ranges. Traders call these ranges brackets. Inside a bracket, price tends to bounce between an upper edge and a lower edge. When price pushes hard into one of those edges but fails to break through, it often gets rejected and snaps back toward the middle. This strategy is built entirely around catching those rejections. Everything the EA knows comes from raw price data alone: the open, high, low, and close of each candle. There are no indicators, no oscillators, no moving averages, and no volume readings involved. The strategy builds its own support and resistance by scanning the highest high and the lowest low over a recent lookback window. That gives it the upper edge, the lower edge, and the midline of the bracket. When price probes one of those edges, prints a long rejection wick, and then closes back inside the range, the strategy fades that move. It sells failed pushes into the range high and buys failed probes of the range low, and in both cases it aims to ride price back toward the midline. That is classic mean reversion thinking. This kind of approach is best suited to ranging, sideways markets, which is why it tends to fit foreign exchange pairs and metals on the 15-minute through 1-hour time frames. To keep itself out of trouble, the EA includes a range width filter. It skips ranges that are too tight to clear the spread, and it skips abnormally wide ranges that usually signal a trend rather than a clean bracket. Remember, this is an educational breakdown of how the logic works. It is not a promise of any particular outcome. Let's walk through the logic step by step. The strategy evaluates its rules only once per bar, right after a candle closes. That candle becomes this signal candle. First, the EA builds the bracket. It looks back over a window of candles, 20 by default, but it deliberately excludes the signal candle itself. From that window, it takes the highest high as the range high and the lowest low as the range low. The midpoint between them is the midline, and the distance between them is the range width. Next comes a filter. The strategy measures the range width as a percentage of price. If the range is narrower than the minimum allowed, it's too tight to be worth trading after spread. If it's wider than the maximum, it probably isn't a range at all, it's a trend. Either way, the EA stands aside. Now the strategy inspects the signal candle. For a short trade, it checks 4 things. The candle's high must have reached up into the resistance zone near the range high. The candle must have closed at or below the range high, meaning the push failed. It must have printed a dominant upper wick, at least half of the candle's total range by default, and it must have closed in the lower half of its own body, confirming the rejection from resistance. It also checks that current price is still inside the range, so it never chases a breakout. When all of that lines up, the strategy signals a sell. For a long trade, it's a mirror image at the lower edge. The candle must probe down into the support zone, fail to close below the range low, print a dominant lower wick, and close in the upper half of its range. Risk management is fixed and mechanical. On a short, the stop loss is placed just above the rejected resistance, a small buffer beyond the range high. If the bracket truly breaks, the trade is closed. The take profit is set a configurable fraction of the range back toward the opposite edge at the default of 1/2. That lands right on the midline. The EA only ever holds one position at a time and lets the stop and target manage it from there. Let's read the code the way you'd see it in MetaEditor. At the top are the input parameters you can tune. Range period is the look-back window that defines the bracket. Make it larger, and the range is drawn from a longer stretch of history. Edge zone % controls how close to the edge a wick must reach to count as a test. A smaller value demands a more precise poke. RejectionWickRatio sets how long the rejection wick must be relative to the whole candle. Raise it, and you only accept very clean rejections. Stop buffer percent decides how far beyond the edge the stop sits, and target fraction sets how far back toward the opposite edge the take profit aims, where 1/2 is the midline. Now the signal logic. For a short, the code reads the just closed candle's values. Tested upper checks the candle's high reached into the resistance zone. Closed inside you confirms it closed at or below the range high, so the push failed. Dominant upper requires the upper wick to be at least the wick ratio fraction of the bar's range. And close lower H confirms the candle closed in its lower half. When all of those are true, and price is still below the range high, the EA sends a sell. The stop loss is the range high plus the buffer, just above the rejected resistance. The take profit is the range high minus the target fraction times the width, pulling price back toward the midline. The long block directly below is the exact mirror at the range low. Let's watch this play out on the chart. Notice the 3 dashed lines. The red line up top is the range high, our resistance. The green line at the bottom is the range low, our support. And the gray line in the middle is the midline, the mean reversion target for both directions. Watch the early candles drift down toward support. Then a candle dips below the green line, pokes into the support zone, but it cannot close down there. Instead, it prints a long lower wick and closes back up in the upper half of its body. That is a failed probe of the range low, and it's exactly the rejection the strategy is looking for. On the next bar, the buy entry triggers near 10859. Price then lifts away from support, candle by candle, until it reaches the midline, where the take profit closes the long for a clean mean reversion move back to the middle. Now follow price as it keeps climbing past the midline toward the upper edge. A candle pushes up into the resistance zone and even pokes through the red line, but it fails to close above it. It prints a long upper wick and closes back in the lower half of its range. That is a failed push into the range high. On the next bar, the sell entry triggers near 10884. From there, price rolls over and falls back down toward the midline, where the short's take profit closes the trade. So in both cases the pattern is identical. A probe of the edge, a rejection wick, a close back inside the bracket, and a ride back toward the middle. This is for educational purposes only, to show how the logic behaves. And that's bracket edge fade. We covered how it builds a bracket from pure price data, how its range width filter keeps it out of trends, how it fades failed pushes at the edges with a dominant rejection wick, and how it places a stop just beyond the edge while targeting the midline. It's a clean, fully mechanical way to think about mean reversion inside a range, with no indicators at all. If you found this breakdown helpful, please hit the like button, subscribe for more MetaTrader 5 strategy analyses, and drop a comment telling me which EA you'd like me to take apart next. You can find more deep dives over at www.algobot.live. Remember, everything in this video is for educational purposes only and is not financial advice. Always test thoroughly on a demo account and manage your risk carefully. Past performance does not guarantee future results. Trade responsibly.